All right. Good morning, Rhino. Always the best part of the day. Can't wait. All right, let's go. Let's see what is going on today. So, good morning, good morning. Come on in, come on in, come 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 on in. All right, let's get everyone going. You know, I bet you Voss water, like I remember it, tasted delicious. But now it's just regular water that's in a fridge. And you know what? Sometimes I trick myself to think it's Voss. And when I do, I'm like, oh my God, this is amazing. And when I realize it's like drinking dirty water on the linoleum floor, I'm like, wow. But anyway, enough about me and my psychotics about drinking water. Let's go ahead and get everyone in, see what we have going on today. So I find it, so it's funny because I'm like completely psychotic, right? So in my experience in the market, if you find yourself staring at it all day, you're doing it wrong. Because if you're staring at it all day, you by definition are completely 100% hostage and susceptible to your emotions. And if I were to ask you, when do you think you make more mistakes, when you act emotionally or when you act logically? The answer is quite obvious that when you act emotionally, you make more mistakes than when you act logically. Okay. So in lieu of staring at the screen all day, you have certain experiences that have created a structure. Like, for instance, I don't look at the market the first half hour because that's rookie hour, right? Rookie half hour. It's where a whole bunch of suckers are back left and right. Now, that's not to say that it's impossible or even improbable to make a profit during that half hour, because where this is all coming from is that at the end of yesterday, where the market was down, at the end of the day, and not the saying at the end of the day, no, really, at the end of my day, I looked at the stock market and I was like, you know what, MFer, right? Like if I would have sold everything at the open, my account would be much nicer than where it was when it closed. Okay. But is that the right way to think? Playing the woulda, coulda, shoulda game after having the information in front of you of what happened is a fool's game, because we have the luxury of being together every morning. When we talk, it makes coherent sense, right? Like when I say something or when you say something or when we think something, it's not like, oh my God, and then I tasted the bowling bowl and my favorite flavor was purple. Like that makes no sense. And although it makes no sense, I kind of feel like I understood what I just said, right? That makes literally no sense. But when we're talking, okay, this is why I like this, and this is why I think this is going to happen based on this, and it allows us to outline, well, if this is wrong, then we know that's wrong, and we can recalibrate and see where we went wrong and how we could readjust our expectations. Okay. So when a day happens that everything doesn't go 100% perfectly, it's natural to look back and say, where did I go wrong? And in doing that autopsy, you cannot help but to say, oh man, if I would have just done this, right? Like Josh Allen and Patrick Mahomes had the greatest playoff game ever Sunday night. Best football game ever. Everyone's talking about it. In fact, if you don't like football, I'm sure you've heard or seen or are aware of this game that happened Sunday night. And this morning I was looking through Twitter, right? Just flicking through stuff. And one person wrote, bro, Josh Allen couldn't have done anything better, right? Because he had the most masterful game you can ever imagine. He scored a touchdown with 2 minutes left. Then the other team scored a touchdown. Then he came back and scored a touchdown again with 13 seconds left. Then the other team came back. And then they had to flip a coin for overtime. He called tails. It was heads. The other team got the ball, scored, game over. And in this post on Twitter, the person wrote, Josh Allen couldn't have done anything better. And the other guy goes, well, he could have called heads. And here's the thing. That's true. He could have called heads. He probably would have won the game. But was it in his power to have the control over whether that coin was going to be heads or tails? No, it wasn't. There is a certain randomness to life. And let me scale that back. I don't believe anything's random. But I do believe that the variables in any particular scenario are so infinite that the human brain and even AI technology cannot calculate every single variable. What do I mean? For instance, I believe you are a result of every situation you've ever been in, right? Like if you went ahead and got hit by a car once, then you're going to cross the road looking right, left for the rest of your life. Now, if somebody sees you looking right, left, they can either say you're a complete cuckoo bird, because why are you looking right, left so many times? Or they could say, oh, they might have got hit by a car or might have had a close encounter. And this is them taking that extra level of caution because they have an experience that I don't have. So if you take that line of thinking and bring it all the way back to when you came out your mother's womb, then it is conceivable to say that everything that's ever been a part of your life since that doctor slapped your butt created who you are. And then you can take it even further and say, well, maybe your mother ate a particular food, or maybe your mother and father had a particular life, or maybe there's a particular stress, or maybe there's a particular blah, blah, blah that aided in your development. Therefore, if you were able to calculate that, you would be able to say, well, this child's allergic to blueberries because the mother was allergic to blueberries, right? The point is, I don't believe in coincidences. I don't believe in randomness, but I do believe that the variables are so infinite that you cannot calculate them all. That being said, you have to go ahead and move forward according to your best calculation. Because if your calculation is better, is right more times than not, and you continually do it and you continually improve it, you guarantee yourself a good outcome. If you're right 6 out of 10 times, and from here to the rest of your life, you only improve that 6 to maybe 7, then you got to take every opportunity exactly the way you would take every other opportunity. That's why McDonald's is so successful. Do you think that the Big Mac is the best tasting sandwich in the world? No. Do you think that every individual McDonald's cannot make a better Big Mac than another one? No. But the fact that it's so consistent that no matter what, that's the sandwich, all McDonald's needs to know is that 51 out of 100 people are going to like that burger. Therefore, they can keep producing it. That's how betting works. That's how gambling works. As long as 51% of people lose, everyone's happy. It doesn't matter. That's why casinos love when you win. Win, 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 win. Because they know that 51 times you're going to lose out of 100. So it only behooves them to cheer your 49, because when you do lose, they want you to lose with them. They want you to lose like a man. They want you to lose and lose 100 grand and say, hey, you know what? I made so much over there. Give me the lobster tail. So I cannot in good conscience look at yesterday and say, oh my God, I'm ripping out my hair. It really wasn't fun. Like when I looked at the stock market at the end of the day. So I don't pay attention to it at all, because not like, oh, Anthony, you're so important doing all this stuff, but we own a search engine, right? Like we're building a lot of stuff. Like one could say, Ant, this program is so amazing. How much work do you put into it? And it's not that I don't put work into it. I do. But my work, it's like when you go to a doctor. No, it's like when you buy a Viagra pill, right? And it's like $80 or whatever crazy number it is. The pill itself didn't cost $80 to make, but all of the doctorates and time and labor and research that went into creating the formula that eventually made that pill does justify that price, because that all needs to be paid for. That's exactly what this platform is. I have lost myself and other people millions of dollars in my career. I've made people millions of dollars in my career. Overall, I'm better than 51 out of 100. In fact, I'm probably close to like 75, 76. 3 out of 4 times I'm right, which means sometimes I'm wrong, which isn't good. But if I continue to be 3 out of 4 times right, then I know I'm doing the right thing. Therefore, when it comes to this platform, I don't look at it during the day, because if I look at it during the day, I'm taking away from the other things that we're doing that everyone depends on us for. And by looking away, I'm now affecting those odds, because there's nothing that I'm going to see in the day that's going to change my belief, because my belief is so comprehensive on so many different variables that the incremental moves in the market on a day-to-day basis will just simply manage my emotions, not my logic. That's why I don't look at the market during the day. Now, we own options that expire tomorrow. So one would say, well, Ant, you probably should look at it during the day because they move very volatilely. Yeah, I think so too. But there's also opportunity cost, right? Like, because we're doing other things, I can't take away from other things to do that, which is why I only manage my own money. If I lose some of my own money, well, then I lost some of my own money. But I don't think I'm going to lose some of my own money. And I know 3 out of 4 times I'll make money, right? So let's talk about yesterday. And didn't you already talk about yesterday? No, that was like a preamble. That was like, hey guys, we're at a boot camp. Let's learn what the actual person thinks. Because I was in the gym this morning and I was thinking, well, in the last week, we've made 2 trades over 40%, right? The Netflix was 40% and the Apple Monday calls was 48% got sold yesterday. In fact, many people made a lot of money on Etsy. I'm sure some people sold Apple during the day when it was up. I know a couple of people were up 25, 30%. Okay, so we already made 2 trades over 40%. That's really good. Now, our Etsy position at last look was down, but we have that till February. So we don't, honestly, we could, on the list of things we're concerned about, Etsy calls that expire a month from now aren't even on the top 100. Those Apple calls, though, that are Apple 165s that expire tomorrow, why do we own them? Well, we bought them Friday with the belief that we were only buying half our position. And if it was down, we were going to buy more Monday. And if it was down, we were going to buy more Tuesday. Well, we did buy more Monday, but we bought a different strike. That strike went up 50%. So can we say those are different stocks? No, it was the same pool of money. We said, we're buying our initial position here. And if it's down, we're going to buy this position. That second position was up close to 50%. Now, it was smaller than the first one, but does that profit not offset that loss because you're supposed to average the positions, right? Okay, and you're still, what are you saying? The account's still down. I know. The belief was risk reward that because Apple reports earnings, there it is. Because Apple reports earnings Thursday evening, and because between when we bought it to Thursday evening, enough things would happen that it was our belief that the market was going to stop going down and start looking for those opportunistic, value-seeking bargain hunters, that the confluence of events would yield one to say, oh my God, buy Apple here, right? And we believed that that would at least move the stock to 165 to 167 by today's close. And if that were the case, then our options would be worth money. They would be profitable before ever having to risk the earnings announcement. So we don't like playing earnings announcement. It's like simply gambling. But is it? Now, there's gambling and then there's gambling, right? Like, for instance, I was watching 21 with my wife the other day, and it was about blackjack with Kevin Spacey and blah, blah, blah. And a line that he says to Ben, the new person he brings on the team, he goes, very important, you need to know this. We count cards. We do not gamble. And it was very telling because blackjack isn't a mathematical game. If you know the cards that are already out of the deck, you know the cards that are left in the deck. You can calculate those odds versus the card that the deal is showing versus the cards that you have. And you could calculate the odds that you're going to get close to 21 and or the deal is going to bust on 21. They'll go over 21, right? And the calculation actually, if you don't count the cards, if you just play normal, I think you have a 51% chance of winning. The player actually has the odds in the casino on blackjack. But if you do count cards and you're able to count how many decks are in the dealer and all that math, you can really move that number to like 60, 65, 70% in your favor. So if you were so inclined, and if you knew that your favor was now 70%, it wasn't 50-50 anymore, is that gambling? I don't think it is. I think anything that's 65, 70% is taking that shot. Because if we think that our own performance with all the best information on a clean slate is 70 to 75%, then a situation that's 70% kind of is the same exact thing. And that's what I think about Apple. So we got to see what happens today. And I will make this decision before the close. I'm not making this decision now, so I need to know where the stock is. And I'm going to know once we take a look, but I need to know where it is at the end of the day. Because I have no problem taking a loss. If I can explain anything in this bootcamp, that's the most important thing. There is no nobility in believing you were right and finding solace in the pain of your account going to zero. Zero. You are a fool. You are a loser. You do not find nobility in that. Now, before I say something so harsh as you're a loser if that's the last thing you do, right? Like, we've all done that, right? But you grow from it. And the correct thing to do is to go ahead and always live to fight another day. Because if you could go ahead and, all right, I took a 20% loss here, but I can make 40% back over there, You just got to get at it. So that is an option on the table. If we are down by the end of the day, it is an option that we will go ahead and cut our losses. Because remember, the belief always was that because those earnings were there, our losses would always be buoyed, right? That people would not go ahead and sell the stock to zero because they always believe that, but wait, they're reporting earnings. Like Apple went ahead and hinted that they're making an EV car. Can you imagine if Apple says, all right, so we went a little bit more forward and now we have plans to launch our first car, the Apple car in 2025? Do you know what would happen to that stock? What if they said, okay, we have $200 billion sitting around and we like the car idea, we're gonna put some money to it, but we do believe in this environment, we should go ahead and increase our dividend. Do you know what would happen to the stock? Or they said, hey, listen, our stock, we believe is a lot lower than we want. And with all this $200 billion that we have sitting around, which conceivably is probably $300 billion, because they just had the Q4 season, the holiday season, right? How many iPhones did they sell? It is our belief that our stock is just undervalued. And in stewards of capital, the best place we can put our money is to go ahead and support our stock and buy some of our stock back, because we believe if we buy our stock here, it's going to be worth more later on. That's a good investment. Do you know what would happen to the stock, right? Now, a lot of the things that companies have come out and said was supply chain concerns. All right, we have supply chain concerns, which is quite normal, right? After you have COVID and the pandemic and the endemic or whatever, along the supply chain, you see, well, these companies have COVID restrictions and mandates, so they lost employees. This was been uninvested for a long time. They don't have the proper people to get the things out, like truckers, whatever. Supply chain disruptions has been the cause for a lot of companies missing earnings over the last year. That's nothing new, right? My wife asked me to get her Rice Krispies. I went to Acme a week ago. No Rice Krispies. She thinks I'm nuts. She goes, Anthony, I know they have Rice Krispies. It's a big blue box. And she's like describing a box to me like I don't know what Rice Krispies are. So I go back there yesterday, I take a picture. There's no Rice Krispies. She goes, the world's coming to an end. If you cannot have Rice Krispies at a cereal place, right? The point is the supply chain. It's all like when we got married, we went to that place that was doing envelopes. And they said, listen, if you want us to go ahead and make custom envelopes, you have to go to the store and buy envelopes. Our supply disruptions are real. We don't have envelopes. We can't get envelopes. And I was like, envelopes? Like, are you okay? Maybe this is a little real, right? I go to GNC, my vitamins still aren't there. The point is you can see it all along the way because a lot of stuff comes from China. And you can imagine, well, the disruptions between China and here in terms of COVID, politics, like it's there, right? Anyway. The reason I mention all this is because when Steve Jobs, who's the founder of Apple, who's like the most revolutionary, most amazing CEO ever in the history of the world, when he was diagnosed, I think it was kidney cancer, right? Liver or kidney, but like a really bad one. And he knew he was going to die in a couple of months. He was tasked with naming his successor. And he chose Tim Cook, which is the current CEO of Apple. And I remember when that happened, everyone was like, what the H? Tim Cook, that guy couldn't innovate himself out of a paper bag. He's not an innovative person. And to those people's credits, he's not. What has Apple invented since Steve Jobs has left? Steve Jobs invented the iPhone. Steve Jobs invented the iPad. Steve Jobs invented the Mac. All Tim Cook has done is scaled it, which is amazing. That's not a knock on him. He's really good. To go ahead and, if you have anything good in life and you have a business, and those that have a business understand this, it's easy to do it on a small scale. Now take that success and multiply it across the globe. Grow the company to billions and billions and billions of more people. That's a big deal, right? Like that's very important, but that's kind of like a chief operations officer. That shouldn't be a CEO, unless in lieu of someone that Steve Jobs saw Steve Jobs in, you go for that person, and he did. So the reasons why Tim Cook was kind of poo-pooed when he came into the CEO of Apple was the knock on him was he was a supply chain guy. He was that kind of guy. He was, supply. Yeah, he could manage the supply chain. He can make sure that things get to people. He can manage employees, but he can't innovate like Steve Jobs. Well, guess what, guys? There's only one Steve Jobs, right? And in lieu of Steve Jobs, Tim Cook did a really good job. But here's the point of the story. During a moment where everyone's missing earnings because of supply chain, you now have the biggest company in the world with the most successful products in the world that everybody wants. My wife wanted an iPhone 13, she still didn't get it because it was on back order, which would speak to supply chain. But by the third time, they're like, hey, we got it. And she's like, you guys can kick rocks. Like, you just annoyed me. I'm done with you. Well, because my wife is fiery. But the point is, they would have had it to her before this quarter would be done, before this quarter would be reported. The point being, not only do you have the tailwinds of everything they do, not only do you have the tailwinds of all the money that they have and what they're going to do with it, not only do you have the tailwinds of the market pulling back to the point that it did, not only do you have the tailwinds of all that, but the thing that's hurting other companies is conceivably what Apple's actually good at, because that's the CEO that they have. So when I put all of that together, I think to myself, I kind of really want to be in the earnings. I really believe it. IBM was up 7 points the next day, which was what, 3-4%. Microsoft was down 5%, that was up 5%. All of the companies, Tesla was down like 5%, and then last I checked, it was up 1%, then it was down 1%. Maybe it's up now, I don't know, I need to see it. We're gonna look at it together. You guys probably already see it, but I don't, and I will. All of these things matter. But what I'm seeing is, let's take a look at the market again. Now, let's go back to the beginning of the week. I'll kind of run through it quickly so we can get to yesterday, but it is important. Monday, we were down 1,100, rebounded plus 100. Tuesday, we were down 500. I said, listen, we got to retest the lows. If we could go down 800-900 and end up near positive or just not fall apart, that would be perfect. We went down 800 points or 900. We ended up down 100. Okay, cool. Wednesday came around. We started up 300, 400, 500, right? And I said right here, guys, the book says this is finally an opportunity for people to short the market. The market's been down every single day. The book says that people that are looking to short the market are going to jump in, and today's a war. Let's see what happens with the market. But they are going to push this thing down because it's been down every day, and everyone that's been watching it go down is salivating, saying, give me a day that market's up. I'm going to sell it. I'm going to sell it. But we have to hold those lows. We have to hold the down 800 the day before. And yes, I believe we were up 500-600 before the Fed meeting, which also I said at 2 o'clock, make your decision, because there's going to be such volatility that if you're up by 2 o'clock and you are unwilling to take the risk of what's about to happen, sell. And I know I said that. So here's the thing, all along the way, I cannot feel guilty losing money because it's my money. Anyone that listens and watches this broadcast, honestly, I can't imagine, and I'm not just saying it's me, but when I was growing up in the market, if I had this 10-day boot camp to watch, I would have been so much better at such an early age, right? So I know that we're doing good, right? So all of that was said, the market was up 600, 600, I think, because I listened to the recap. And then ended up down, I think it was like down 300 at one point. It ended up down 250, something like that. And I wanted to see what Jerome Powell said, because again, it was his words that mattered. And it was our belief that since the market already believes 100% that we're going to get a rate hike in March, and since we personally believe that there's 0% chance that ever actually happens, that he was going to have to try to manage the credibility and kind of hint a little bit like, we're pretty sure we're going to do it, right? And leave a door open. He didn't. He took that door and slammed it so far, it was like a Jehovah's Witness came to your door 5 days in a row, and you're like, the first day, you're like, I respect your religion, I'm cool with it, but I'm just not interested. And the second day, you're like, no, I really respect your religion, but I'm just not interested. The third day, like, maybe you thought like this, do you know the address? Like, not interested. The fourth day, like, you start playing games with them, like, yeah, no, I'm not interested. Then the fifth day, you just slam the door, like, go away. You're taking advantage of it. That's what Jerome Powell did. So the worst case scenario happened. The thing that the market was fearing was confirmed. The market then sold off from the 600 down to 300. Okay, where are we going with this? We were down 1,100 Monday, came back. We were down 800 Tuesday, came back. Up 600 yesterday, gave everyone the opportunity to sell, but went down to 300, didn't even get down to that 800. In fact, the market stayed within the range of holding the support. In fact, one could make the argument that it tested the support every time. 1,100 tested, 800 tested, 300 tested. And then it comes out to Tesla earnings, and Tesla was down 5%. In fact, I woke up last night. Well, I wake up a lot of times during the night. I have this amazing bundle of joy, who's actually like the coolest kid in the world. Like, you guys got to meet my son. I'm going to bring him on one day. He's the coolest kid ever. Like, I look forward to going home just to hang out with him. And he cries, I think, at like 1 or 2 in the morning. And my wife's amazing because she tells me he cries a bunch of times, but I only really know 1 or 2 times. So either she's lying to me or she just does such a great job of tending to him. And I know it's the first, right? Like, she's amazing. That being said, so at 2 o'clock, he's crying. And, you know, I go in and say hello to him because we both like going in together. We like him seeing us together. And then she's like, babe, go back to sleep. You have work in the morning. And I go, okay. I go back to bed. I take out my phone and I take a look at the futures. The futures were down 450 points. The NASDAQ was down 200 points. And I was like, you gotta be kidding me. I was like, you know, I can handle a lot of stuff, but not often am I like so wrong, right? I'm not usually so wrong. Because for the market to be down over 400, now it's the 300 we're down, plus the 400, that means we probably would have broke under the 800. We're gonna test the 1100, everything goes to shit, SHIT. And I'm like, wow, I look really stupid. I was like, but it doesn't make sense to me. Everything's been recovering. Everyone's been looking for the opportunity to come back. I don't understand why it's down this much. But there's the other thing, right? With it being down so much, it then provides an opportunity, right? The likelihood is that it's going to go down because it's already down. It's already down 450 points. Everyone that's fearful is like, oh my God, see? Everyone that saw the market up 500 points and said, this isn't real, I'm going to short this thing, now looks like a genius. Everyone looks like a genius. Everyone looks like a genius. Which means they could tell their friends, hey guys, look, I'm a genius. Look, I told you, which means it should have cascaded lower. When I woke up this morning, I was like, I looked at the futures like this. In fact, I actually not yelled, because I never yell at my wife, but I was telling her the story and she's like, oh, now I have to see. I was like, please don't look because I can read your face. And she's like, and I go, you're going to ruin my day. I don't want to know what it is before I go. I guess that sounds like a yelling, right? But that's after I go to the gym. Like, I'm a very Italian, passionate, energetic person. But I'm like, she knows I'm not yelling. So I look at her face and I'm like, all right, now I have to look because I can read your face. And the futures were down like 30. And I was like, okay. As bad as that was, because it was so bad and because it reversed, that's really good. Monday, 1100 reversed, 800 Tuesday reversed. Wednesday gave everyone the opportunity to go ahead and press it down. The worst news came out. The market goes down. And now Thursday morning, it's down big time. But it doesn't stay there. It reverses. Now, I don't know what the market is right now. We're going to look at it together. And this is what actually makes this program. Can you stop? This is what makes this program so, at least if I was on that side, I would find it to be the high value of the program. In the sense, I really have no idea where it is, right? Which also adds to a level that I'm offering you in the sense of the person you're speaking to or that you're listening to, are they credible or are they not? Because the one thing that always bothers me the most when people are talking about money and stocks is that they look at the stock market, and I'm looking at myself right now, right? Like, I don't feel like turning the computer. I guess I should, right? Can you see it, right? But just to go ahead and illustrate what I was saying, they go ahead and look at the stock market and they're like, okay, it's down like 1,000. Yeah, and then this happened and people, I can't believe that they would even think that would happen. You know what, we're waiting, we've been waiting and we're staying on the sidelines. And those that thought otherwise, we just don't understand what they're doing. It's really cool, right? Like they know what happened and now they can speak really tough. Well, the market's up 1,000. You know, when people were being overly pessimistic, we never quite understood why they were being so pessimistic. At these levels, you got to take a long-term view. At the very least, do you think the U.S. economy is going out of business? When someone said to you, if the market came down 10%, would you buy it? Would you? You said yes, and now you're running scared. Not us, not here. We have the courage to stand behind it, and we will ride this thing. And we're just being proven right today because we have that ability. Yeah, like get the out of here. You could say whatever you want when you know where the market is. How about you go ahead and talk about the market while the market's going on and then look at it together with everyone that you're talking to. So again, we're not going to be perfect. And there's going to be times that, like, what was it, a day last week where we did this and I was like, holy, we're down 800. like that's going to happen. But I think the value to considering anyone is if you find them to be credible. Credible is different than perfect. Credible is actually even different than performance. If I can look at you and believe you as a person, then I don't need to worry about that you're tricking me or that there's something that I don't know. And as long as I know that, then you're a tool, and not in a bad way. But if you think this and you believe this and you're genuine to yourself, then I know that when you do this, it means this. Like how many other people like Ravi and Rod and others in our group that say, hey, Ant, yeah, usually when you buy stuff, you're a little early, so I wait a little bit. That's not them making fun of me. That's not them saying, because really what they're saying is when you buy things, you time it wrong, right? But that's not what they're saying. That's just what somebody might hear because they're looking to hear something bad. They're saying, we listen to you, we joined you, we're all in this together, but we notice that when you speak this way or when you do this thing, it's a particular trend, and therefore we use you as a tool to then monitor us. And I got to tell you, I think they have better performance than me. I think I need to start buying after they buy. Like, I don't know, right? So anyway, let's get to it. Let's see where we are today. And, let's have some fun. Okay. Where is the market? Okay. Let's move this, get this out of here. Is that today or is that yesterday? Let's see. Hey, the market's up 291. How do you like those apples? Which is really, really cool because that's what we were looking at. The market was down 500 last night and now it's up. Remember, yesterday, the Fed said everything that they could. The worst, I don't know what more worst case can come. If Russia invaded Ukraine, did the market not already price that in? Like, has the market not been scared that has natural gas prices and oil prices not already effectively priced in what that would be? If the Federal Reserve says they're going to raise rates, what would the market do? I don't know. They just slammed the door yesterday. They said, tell your mama we're raising rates. Okay, all right. What about supply disruptions? What about if these big companies are missing things because of supply disruptions? I don't know. It's been happening all week. Right? What if the market came down 10%? Wouldn't that scare you? It's been happening all week. What if the VIX jumps over 30? It's there now. The point is, I think it's prudent for someone to understand the difference between forward-looking and backward-looking. History is backward-looking. For instance, if you're telling a story, you're telling it based on events that already happened. Therefore, the moment that you're living, that you're telling the story, you are already a product of everything that happened. That's not doing you any good by saying, like, that doesn't help anyone. Like, for instance, my team here at Rhino, they know. First of all, they know me very well. But when I go ahead and say that there's a challenge that happens or something, they never, for the life of them, go, yeah, well, it happened because of this, and what, in what world do I care? Right? Like, we should identify why things happen. But that, I don't care if it happened because you were drugged out doing cocaine yesterday. It doesn't matter to me. Now, granted, you're fired because of that, but that doesn't change what I care about at this moment. I want a solution. I want to know going forward. Yeah, I can't have this happen again, right? Therefore, you're fired. But you doing that does not change what I need at the moment. You doing that changes who I'm going to put in that position going forward, right? Like, there's a difference. So when people sit here and tell you, oh my God, the Fed's going to raise rates and Russia might invade Ukraine and COVID's now morphing to Pokemon disease and all of this stuff. Well, what part of that don't you already know? Right? Like, what don't you know already? Think about how many hedge funds and pension funds have gotten blown up. Do you know this January is the worst January, I think, ever in history? Do you know this January before the last two down days was the worst January since March 2008? Do you know the NASDAQ's down 16, 17, 18%? Do you know 20% is actually definition of a crash? That the NASDAQ pretty much just crashed in front of you. Well, I'm sorry, when things crash, I don't run away from them. I say, okay, it crashed. This is a time to buy it. And because if you're selling something because it crashed, you're doing the wrong thing. all the bad, it's like the logic and emotion are hitting you at different times, right? So the logic of what you should do should have been done weeks ago. The emotion of what you should do is just coming to you now. Oh my God, yeah, this and this and this and this and this. And my wife is amazing, right? Because sometimes like if I'm home early or whatever, we watch CNBC together. And yesterday, I think it was like after the bell, right? Because I came home later. And this guy on TV is like, oh, Muhammad Al-Arian from Alliance, whatever, who used to be partners with, what's his name, Bill Gross over at PIMCO. And then Bill Gross kicked him out because I'm not going to say anything bad about him. Because actually I did say something bad about him on Twitter once and he responded to me. And I was like, oh, sorry. He's really good at retelling. And my wife will tell you, he's like, yeah, so all of these confluence of events could really have a detrimental effect on the stock market. I took my pen, I threw it on the wall. I go, are you serious? It might, where was he the last 2 months? There's nothing that happened mattered at all. But, whatever. What do I know, right? All right, so let's get into the stocks. What we see now is the market's up 3. I really would like my pen. Ooh. Okay, the market's up 330, which is less than 1%. It's not that much, right? S&P 0.8%, the NASDAQ only 0.4%. The stocks we own are NASDAQ, so we really would like that to pick up. It just went down because I said something. Russell is 0.85%. That's kind of good. The VIX down 5.6% is good because, again, volatility is coming in. So let's see our charts, right? So let's start with, what are we comparing this to? Okay, so this is the NASDAQ. So let's see where we're at, right? So this is a 4-hour chart. And what we can see, and these are the lines we already put in, right? So when it was down, volume was up, volatility was up. Then the stock price went up, volume went down, but volatility went down, right? So that was good, but the volume was down. So really, like, who was really buying it? And then it went down, volume went up, volatility went up. Now it's trading sideways, right? Like you could say it's up because it's higher than where it was. So let's take, the market's been open for over an hour, so let's look at hour bars. This would give us the most up to date, right? All right. So let's take this. Oh, okay. Down, up, up. We know that, right? Stock down, volume up, volatility up. Bad and done, right? Now stock up. Volume sideways, volatility down. Okay, what does that mean? So the stock's going up, the volume is sideways, so people aren't rushing in. It's like a tempered, but they're not rushing in, right? Like they're not going away. There are those that are like, okay, this is the time because the volume's staying sideways. The volume's not decreasing as it's going up, it's staying sideways. So they're waiting for something. And volatility's down. Now, today's the 27th. This is all during the 24th. Okay. So I think this was when the market ended up on the highs, right? The 24th. Okay. So the 25th comes around, which is Wednesday. So let's just say the market was sideways all day, right? Can we say that? I think that's fair. Okay. And the volume was down. And volatility continued to go down. So people are becoming less volatile. They're becoming more comfortable with it. It's staying sideways and there's less volume. Now this volume was selling volume. This selling volume stopped increasing because it was even. This selling volume decreased, right? Because you could say it's selling volume because all of this is sells. So this is trying to make a bottom. So you have this moving sideways. In fact, if you look even more micro in it, you can see as the market was moving lower, the volume was moving lower. And as it was moving up, the volume was moving up, right? So that would be if you're looking at it like in the 15-minute intervals, but we're just going to keep it like this. All right. So then what happens the next day? So that's the 25th. The 26th is yesterday. Okay. So the market starts up gets sold down, rallies the rest of the day, right? Okay. So before the Fed happens, as the market was moving up, look what happened now. The volume was moving down. Because people were saying, in front of this Fed, it's all gambling. I don't want to be a part of that. I'm not in the market to gamble, therefore I'm not going to do it, right? So you saw the volume going down, and you saw the volatility going down. Okay, cool. Then the Fed comes out and pisses everyone off. Okay, cool. That's what they do. They're so obnoxious. There used to be a Fed chairman, Alan Greenspan, and when he raised rates, like he would get nervous. There was a correlation to food. Whether when he raised rates, he got nervous and needed an extra lunch, or when he didn't raise rates, he felt complacent and needed an extra lunch. One of those stories is true. The point is, there was an actual Alan Greenspan lunchbox indicator. People would actually follow him into the Fed to see how big his lunch bag was to understand if he was going to raise rates or not. So Alan Greenspan's wife was kind of popular because did she make him a tuna fish sandwich or did she make him like a triple decker, right? That's a true story. All right. So the volume, the market spiked down, the volume spiked up. Oh no. And the volatility spiked up. Right? Right. So, oh my God, this is terrible. Everything bad that could happen happened. But wait a second. Even after the event. Okay, we recovered from it. Yeah, the volume's going down, but look how high the volume was for the event, right? So you can't really compare it to this volume. This volume is based on a Fed Reserve moment. Like that's, can you compare the viewership of a TV channel on the Super Bowl as a regular Monday? You can't, right? And this is the after show, whatever. But this is conceivably, this is the first hour today. And this volume is higher than these volumes. Now, granted, that bar is down because we got up to 351 on the Qs and now we're at 346. And we're getting close to we're at the lows of the day. No, we started lower, but here we are, right? So we're fighting. Ooh, Tesla down 7%. Yuck. But look at Microsoft still chugging along. Oh, Etsy's up today. That's nice. Nice to see you, Etsy. Netflix is up because Bill Ackman bought some. Who remembers PSTH that we got annihilated in? That was our worst call ever. But that's Bill Ackman, and he bought some Netflix. So maybe you want to like cancel your Netflix. I'm cool with it. So now what do we see? Okay. So volatility's down. I see volume down, but I kind of don't think it's really down. I just think it's down from those. And I see this moving up. So what I want to do is pull a daily chart and look at the week. Oh man, I have to erase all these stupid things. Okay. Okay. We have 17 minutes, so we're doing fine. Okay. Actually, let's make it 4-hour bars. Okay. So I want to show you something. Okay. So let's draw some trend lines. We haven't really done trend lines, but they, like I always said with our team, I don't draw them, they draw themselves. Actually, let's erase that one. So trend lines is you're taking a top of a point and bringing it across and connecting other points. Because what it does is it reveals reference points that actual traders are using. Because in no world, first of all, the QQQ is the NASDAQ 100, which means it's the 100 largest companies in the NASDAQ, all trading simultaneously, all with their own information. Do you think that by coincidence that it bumped its head here, 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 and it came down? No, that's traders. They're saying, okay, this is a reference line. Let's draw the line. Okay, let's connect these two. And if it goes over this, we break out. If it doesn't, we go under it. Okay, we hit our head on it, we're back under it, right? That's what they do. So you need to know how they play the game. You may not agree with the game, but you need to know how it's played. So then they'll take this bottom one and draw a line. All right, so let's connect this bottom one and connect it to the nearest one. Right, so that would be this green line. Which, by the way, green lines are trend change bars because the volume's so high. So what one would say right now is that we're in a triangle. That if we break out over this, we're going to go a lot higher. If we break out under this, we're going to come to this line. We're going to retest these lows. And then either we're going to collapse or we'll spike up. So what we can say is that volatility is real and you're going to see it. We believe that you break out this line. And I think it could happen as soon as today. So now that brings us to Apple, right? Let's get rid of this because Apple has its own volatility. Because Apple's like its own country, right? Okay. So what we see with Apple, come on, man. Okay. Anthony, why'd you draw the line there? Because it connects that. Like it connects a lot of stuff, right? And it's not arbitrary. I'm just looking to connect lines. I learned this actually in preschool, and I've just been using it ever since. So let's connect the lines. I think they call it connect dots, though. What can I say? I'm a little bit more advanced. All right. Look at where we hit our head again. We hit our head twice, right here. If Apple breaks this line, so realistically, we're looking for it to comfortably in the 163 today, you can say it's going to break out. Look at how long it's been held down by this line. Look how long it's been held down by the man. If it breaks out from the man, it's going to the moon. The heaven's going to hear it now, right? Like, that's what we're looking at. Now, is there something that might make it do that, right? Like, is there some kind of catalyst event that has the potential to break that line? Well, we have earnings. Now, it could break this line. It could break this line. If it breaks this line, that's really bad. If it breaks this line, it's really good. How will we know, though? All right. Well, the price is going up. That's good. So we're going to dissect this, right? So price is going up and volume is going down. Not good, right? You don't want that. But price continues to go up and then volume starts going up. You see, these were the non-believers. But Apple says, you let a man show me what to do first and I will, I don't know, I can't really quote some good scripture, but thou that don't believe it, thou be the father, you better believe it and you better come up with it, right? So all these non-believers are like, eat, now they start believing, now it starts to move up. Now, as I'm saying it, Apple looks like it's at the lows of the day. Not good. But you have to come to the lows to regroup your people, to go ahead and find them through the shadows of everything and find your people and then merge with your people and bring them to the promised land, right? Like that's what it's looking to do. Now it's really at the lows of the day because it's listening to me and Apple's saying, Anthony, like you really need to shut up. Okay, fine. Apple, I'm done talking. All right. So while this was happening, you saw volatility coming down, right? Right. And then as this was happening, volatility spiked up a little bit, but overall it's coming down. So you have volume starting to spike up. Look at volatility tailing off. You have price coming back, and you have a really big announcement where we believe fundamentally, and now technically, it is sound. We believe it's a good idea. We believe Apple's going to do well. Now, what does that mean for what we're doing with our position? Now, we're going to come back to this at the end of the day. And we're not going to go live at the end of the day, but we're going to make a decision at the end of the day. And what's actually quite annoying is why don't I have no red and green? That actually does concern me a little bit because I'd like to see some red and green. I'd like to see a coil spring. I'd like to see the money flow. Maybe I'll turn red and green later. I really was hoping it was, but whatever, right? Okay. So we're going to see. It'll be fun. So I'm going to make a decision probably around 350, whether I'm going to keep my Apple or not. The decision is going to be based on where Apple is. If Apple is under 163, well, actually, if Apple's under 161, I'll probably just take whatever I could get. So remember, my options are 165s. I need like, if it's not over 165, my option's worth zero. That entire investment goes to zero. So I don't want to go ahead and play those earnings if my stock is so far away from 165. But if the stock is over 162 and a half, 163, I think I'm going to let it go. Now, also, we got to see the market conditions. We want to see a market. So today, a market should be getting back, right? So if we had to say our perfect situation, but also the most probable, we believe the market will start up. It'll come down a little bit. It'll never go negative. Those people will say, oh, damn, we should have learned our lesson from last night when we saw the market reverse. Now it's reversing today. We're not able to press it like we were. Let's just get out. And they scurry, they short cover, and the market goes up. We believe that the market's going to have we believe it'll be a strong close. And if it's a strong close, and if Apple's over 162 and a half, 163, we will go ahead and leave those. We will leave those calls, and we will go ahead and participate in these earnings. And tomorrow we will be here for the 10th day and the final day of this boot camp with some egg on our face or some, what's the opposite of egg? Right, Mike? Like in the triangle. Feeling sexy with the, see, Apple's going down because I said sexy. I got to go. Up now it's going up because it said I was going down. But actually, let's take a real quick look because we do have some, like for instance, Etsy is now 22 red and green. So actually what I'm going to do so the Etsy that we bought yesterday, I'm just going to buy more. All right. So I have $6,700 in cash. Let's go buy some more Etsy. Let's buy 10. Why not? Now, also, I'm doing the 155s. Yeah, why not? So let's do a limit order at, what's that, 50, so 25, so it's 420, $4,200. I always hate when they take my order right away. I'm like, oh. All right, so where is it? Got 420. So now my Etsy cost is $515, and I have 16 options. So 5.15 times 1.4 is 721 over 16. So let's go back to our orders because we always have a 40% sell order in. And now we can change this one. So now it's 16. And instead of 985, 40% is now 721. You see how that works? Because we held some money on the sideline, and 720. Because we held some money on the sideline, and because we don't buy all of our positions at once, because we're not complete maniacs, we now lowered our cost basis over $2.50 for what our 40% gain looks. Now, I'll tell you this, Etsy yesterday got up to, this option got up to being $7.18. So if Etsy just has a day like it did yesterday, we're going to get out of this today, right? So also my Apple, I'm going to do something with this. So this is at 40%. I'm going to, what's my cost on this? Probably something crazy, right? So my cost on this is $378. Okay. 3.78. Let's say we got out at 20%. It's 4.5. If this gets me out at a 20% gain today automatically without me having to make a decision, I'll take it. I will totally take that. So that's what we did. Where's this? Ooh, it's up 400 now. The market looks, so actually let's look at the market really quickly today. Okay. So we're gonna look at QQQs because that is the market. That's where the ground zero is, right? And I always feel uncomfortable saying ground zero because that is hollow ground where a lot of people lost their lives. So I just want to acknowledge that and just know that I know that. All right. So it's now 10:20. Well, what time is it? It's 10:55. Okay, this is where the market opened. Look at this. Those people that came in and said, yeah, look, the market opened up again. Remember yesterday it opened up and I shorted that thing and I made a ton of money. I get to do it again. And they did. Uh-oh. Oh, no, we lost all that money. Oh, wait, but the market did go back down because the market always goes back down. Like, duh, the market stinks. Uh-oh. Crypto. Yeah, Amy, let's go take a look at crypto. So Etsy is still red and green, Mike. Yes, and a 22. And in our experiences, 22 red and green, you could close your eyes and buy it, which is not me telling you to do it. But if you did, you'd be doing what I just did. All right, crypto. Let's look at everything on a daily. Okay, Bitcoin. All right, so Bitcoin is nothing. It was a 9, 8 red and green here, and that seemed like the point to buy it. Let's see if any of them are giving us some signals. Let's get out of this thing. Actually, do I have Bitcoin volatility? I would think so. And we got some Bitcoin volatility. So we take a look at Bitcoin. Come on, Bitcoin volatility. So let's pull it out a little bit. Down, down, volume up, volatility up. Now it's moving up. Volume's moving up with it. I don't really know. So it looks like it wants to make a bottom, right? So, all right, let me stop being lazy. All right, so over here, it's moving sideways. Volume was moving down. And volatility was kind of like doing nothing, right? Then it continued to move sideways. Volume started moving up. And volatility started moving up, which is bad. Because what do these people know? And see, you don't, are these people that are looking to buy it or to sell it? You don't really know. But if the volatility is moving up and you know that the average person is becoming more fearful, you can make the assessment that these people are looking to sell. And now there's suckers holding it. And what happens next? Boom, right? Okay. So it comes down. The volume spikes up and volatility spikes up. Okay, that already happened. Now it's pretty much going sideways, right? Volume is going down. And volatility is kind of going down, right? So when it comes to Bitcoin, what this would tell me is that it's becoming exhausted on the sell side. That if a gun was held to my head, I'd buy Bitcoin. Because when the volatility is coming down and the volume is coming down, it's just showing you a level of exhaustion at the same time that people are becoming more comfortable, which equals a price that will go up, or odds will go up. So that's my assessment on Bitcoin by itself. And now let's just kind of scroll them and see if there's any real big opportunity. Ethereum, look at all these trend change bars. That is crazy volume, 10 red and green. Ethereum, I would buy. Ethereum, I like. That looks good. Right? So this looks like a whoop. Because, and again, it's silly to say, but when you go ahead and put your mouse over this, your finger actually just kind of naturally does it. Because you can see it's down, 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 now it's up, and then your finger just kind of just goes that way. Now, that doesn't mean it's definitely going to happen, but Ethereum also has a fundamental thing. All the different metaverse and all the rest is built on Ethereum. So I would buy Ethereum. I don't know if I'm going to make money on it today or tomorrow. That's not what I'm saying. If you held a gun to my head, I would say that you will make money on it this week. But if you were just looking to finally get into one of the things, I would think Ethereum right now is a good thing to do. In fact, maybe, Tanj, I think you're on. I think I would actually go ahead and put some money into Christian's account for Ethereum. I have Coinbase. I don't know if you do, but let's talk about that later. All right. Let's see. Anything else cooking? Let's see. That's an 11 red, no green, so we're not even caring about that. 12 red, no green. That was an 11 red and green, and then look what happened. Boom. It's nice to see it still works sometimes. Come on, can we get a good number somewhere? Somebody give me, 11 red and green, Luna. I don't really know what this is, but 11 red and green seems like the best one so far. So for those that are watching, I'm going to post that. Luna crypto, 11 red and green. Okay. Whoa, 15 red and green on a crypto? What? Link 15 red and green. That's a good one. And that's like a lot of red and green. And this one too. ICP 15 red and green. And as you notice, they are on our super duper list because we did look at this before. 11 red and green seems like, all right, that's cool, but it's not like a 15. 10 red and green for Litecoin. I remember Litecoin. That was like one of the 3 original ones. So that's showing some signs. Litecoin. Cake, 10 red and green. Let me just write them in. Litecoin and Cake, 10 red and green. That's off the list. It was red and green, but no more. Was on the list, no more. Was on the list, no more. Ooh, 2 trend change bars, but it's moving up on them, so maybe it's done going higher. All right, so that's that for crypto. I do want to get out of here. I'm going to be kind of inaccessible today because I have a lot of. So with Rhino, we are building a search engine, and you know what? I could show everyone that, right? I think everyone knows this. So this is the prototype of it. This is not functional. This goes to our website, and this goes to allowing you to become a search result on our search page. We're gonna add, for those that understand Rhino and are in Rhino, then you already know it. I tried to keep Rhino well separate while also inclusive with Rhino, because they're different things, right? You could want to be here to be into stocks, but not be into digital marketing or building search engines. That being said, once this is done, I'm going to be doing a roadshow. Like I'm going to be visiting different towns on a weekend basis. At that point, I'm going to then share with you the value of the coin. And those that know me, all right, Anthony's pretty good and honest and smart when it comes to research. Well, if that's the case, imagine if he did it for himself. That would be like the most super duper thing ever. That's what Rhino coin is. So I don't want to bring it to you yet. I want to keep these Chinese wall between it, but we're getting close to it. And when I do, I'm going to offer you the opportunity. Otherwise, you get the emails. Join us at 2 o'clock. But I do try to keep them separate. Anyways, so that's that. I totally love everyone. Let's get off the share. Hold on, Mike said something. Feels like crypto, the red and greens are always lower. I think so. I think also crypto is just less volume of a market, right? So our algorithm goes ahead and if you notice, our algorithm works the best with high volume companies like S&P and Dow Jones and NASDAQ because there's a lot of participants. When there's a lot of participants, you get a real true price discovery because everyone's looking at it at the same time. With crypto, there's less participants. So that allows for better opportunity, but it also involves more pain. All right, this is a great, I know that this crypto at $1 is going to be $2. Why is it down to 50 cents? Well, does that change your opinion that's going at $2? No, it just kind of pisses you off. That's at 50 cents. But 50 cents to $2 is a better opportunity than $1 to $2. So it's one of those. If you have a tolerance for pain, so maybe in your personal life, you like S&M and you're like whipping yourself, which is hilarious. You know, if you ever see that show Billions, the first scene is S&M, and I'm like, whoa, it punches you and it brings you right in. I am not one of those. I don't know why I'm talking about this. I gotta go, guys. All right, love everyone. I will post later about Apple. I'm gonna post in Rhino Premiere. Oh, all right. So let's do that real quick. Where is okay? So Rhino Premiere. I think can I change the name of this like right now? I'll do that later. Okay. Come on. All right. For those that are not in Rhino Premiere, it's our Facebook group. I still use it every day, obviously, but we send emails. So you could theoretically be a part of the emails and not be part of the Facebook group. But I am not sending an email later about what I'm doing with Apple because I'm going to be really busy today. So I'm just going to jump in the group and post real quick. So if that information is relevant to you, just make sure you're part of the group. If not, don't. You know, that's up to you. Totally cool. Well, I really, really love everyone. I really, really hope the market ends up 1,000 points. I hope Apple comes out. I hope they slaughter earnings. I hope Apple's $180 tomorrow, and I will literally dance naked right here. I don't think I'm really going to do that because I think my wife would kill me. But I will tell you, I will do something. I don't know what it is, but I will do something. So if Apple opens up tomorrow over 170, Anthony is doing something on camera. All right. I love everyone. Bye, guys.